All right, what's happening, everybody? Welcome back to D's Daily DD, right? Where we talk about stocks, crypto, market news, right? All business news, right? All that stuff, right? So welcome back to the channel. Thank you for coming back. Today, I want to remind you, I'm not a financial advisor. It's not financial advice, right? So just a guy on YouTube who loves talking about the market and the stocks, right? So today we're gonna get into some heavy information, guys. Obviously, I'm a little more serious today. There's nothing to be like jumping for joy about because things are pretty serious in the market. And for those of you that are newer to the market and have never experienced, a market like this, it's tough, right? Like, of course, looking at your balance just shrink and shrink and shrink, but it's happening to everybody from rich people to the poor, all around. Very few people are making money in the market right now because you have to know what you're doing. You have to know how to do the options. You have to know how to play puts in order to make profits right now, right? So it is tough for everybody. Just want to let you know I'm hanging in there with you. It's been tough, but if you've never been in a market crash, in my opinion, right now, we are in a big market crash, right? There's a lot of problems with the economy, with, money, with, raise inflation, all that stuff, right? So you might not see me, super uh, happy right now, or like, trying to entertain you and make you laugh. I'm not gonna really crack a lot of jokes right now because I understand that like a lot of people are upset and that this can be pretty detrimental for people who have never experienced this, right? Like I said, I've been trading a few years. I've seen a couple crashes before, so it's not affecting me too much. I am, upset a little bit. Like, yeah, of course, I've seen my value go down. But hey, as long as I'm holding the shares, I still hold the shares, right? So until the price can change and fluctuate, you don't lose until you sell that share of whatever stock you're talking about, right? So, but today we're definitely gonna go over some AMC information, some stock information, and what exactly a market crash is, by definition, and what it entails, and so on. So I'm gonna, always try to bring some kind of education to my subscribers too. So today, we'll go over that information so we can hopefully learn something, right? Even though it's been a bad day, we can still make it, a little bit of a positive day by learning something new and doing something to grow, right? So let's jump into it, guys. Thanks for coming back. Thank you to the subscribers. I love y'all. So let's move over. Yeah, I mean, I'm pretty chill right now, guys. It's been a long day, right? So unfortunately, the market's crashing. This is horrible what happened. If you were involved, I've never been involved in Luna. I've never invested it or bought in it or sold it. But if you look here, this was at $116 on April 4th. And right now it's currently at $1.11. All right. I don't know the whole backstory. I don't know. There's a lot of rumors going out there that maybe a hedge fund had something to do with this. Okay, but I don't know the story, but I just want to, what I'm pointing out is that, the markets are crashing. Okay. And that's not to put more fear, FUD out there. We don't know what's going to happen, but I believe this is going to be short term and we will see some kind of reversal at some point. So here's the educational part I want to talk about. So it's, talking about what causes a market crash. So a stock market crashes a sudden or severe drop in overall share prices, usually within a day, right? But in my opinion, going by the SPY, the markets have been kind of crashing for about a month now, right? Stock market crashes can be due to economic or natural disasters, speculation, or investor panic. Investors can prepare for stock market crashes by diversifying portfolios and shifting to CDs or bonds. So technically, right now, that's what people are doing, right? They're moving their money out of stocks and they're moving it into CDs or bonds or to just straight cash, right? That's why you see a lot of stock prices just going down. The stock market is constantly moving, right? There's a lot of pieces involved. It's not like one person can control the whole thing, right? In my opinion, prices of individual equities rising and falling throughout the trading day whenever the majority of them or a representative group of them called the stock market index takes an especially large dive. A panicked cry often arises. The stock market has crashed. Stock market crashes are certainly scary. Hundreds of investors decline their value, right? Investors losing thousands of dollars on paper anyway, right? Because it's until you sell, right, that you actually take that loss. But what causes them and what are the after effects? And we're going to just go over a closer look and what you need to know. So what happens, there are many definitions what a stock market crash is. Some categorize a crash strictly as a stock market or a stock market index as a representative sampling of stocks losing more than 10% of its value in a single day. Others provide a more general view, simply stating that a crash is a significant or dramatic loss in stock market value, right? And the prices of shares overall usually within a short period of time. So I'm saying about, the past month is where I've seen the past month to 3 months, right, is where you've seen some really dramatic drops. So it drops when confidence or value placed in publicly traded assets goes down, causing investors to sell their positions and move away from the active investing and towards keeping their money in cash or the equivalent, right? So the impact of a crash can vary as well. Sometimes it's limited. For example, on October 19, 1987, after 5 years in a strong bull market, the Dow and S&P 500 both dropped over 20%, right? Like that. Following markets throughout Asia and across Europe. The crash was short and markets quickly recovered within a few days. Then the DJIA regained more than 43% of its points and lost nearly within 2 years of the market had recovered almost 100%. So it took about 2 years, right, from that crash for the market to come back to where it was, right? So that's what I'm saying. Like stocks go up and down, right, all the time. They don't go up forever or down forever. Sometimes they can last longer, right? The most notorious example is the crash of 1929. Stock prices dropped on October 24th, briefly rallied, and then went into a free fall on October 28, 29. Ultimately, the market lost 85% of its value. And though the sole cause of the crash was not one contributing factors of the Great Depression, the worst economic period in American history lasting nearly 10 years. It wasn't the sole cause, but it contributed, right? So there's usually not just like one thing that causes it. So yeah, we just went over what causes it. Panic, right? So right now, obviously, a lot of people are panicking. Although I think it's the worst thing to do unless you just want to, get out and just not really go back to that stock ever. But with AMC, it's different, right? Like even though the price has dropped, to me, the price does not matter until the short's covered. Yeah, so panic, let's see, a natural or man-made disaster or economic crisis. I think this has a lot to do with it, right? The economic crisis that has a ripple effect right now. So it's breaking down the markets, in my opinion. Let's go back down. So these are some of the 20 biggest drops in New York, in the New York Stock Exchange, ranked by percentage, right? So it's happened, a lot of times throughout history, throughout the years, because you have bull markets and bear markets, and then in between those you have, some crashes that happen. Going down. So we've already gone over some examples. I'm not really going to waste too much time on this article. But can it be prevented? There's really no way to prevent the stock market from crashing. However, governments have added safeguards to prevent severe drops and upsets in market stability. So after 1987, they added some circuit breakers that if the S&P 500 experiences a drop of 7% or more over the previous day, trading in the U.S. stock markets is halted. Depending on the severity of the drop, trading could be suspended for either a 15-minute period or the rest of the day. The purpose of this measure is to give analysts and investors some time to gather enough accurate information before making trade decisions, right? Also right here, large amounts of stocks might also be purchased by private investors to try and stabilize a market. In fact, they used to be quite effective a century ago, shortening the panics of 1873 and 1907. The government itself can step in, lowering interest rates to encourage investors to borrow and buy. But what are they doing right now, right? They're raising interest rates. But yeah, crashes can still happen. What you should do, right? And I'm not giving you financial advice. I'm just reading what it says here. But the first thing, don't panic and sell out. Yes, it's hard to hold on and watch your portfolio balance shrink, but unloading when prices are falling is a rarely winning move. Markets tend to shift back over time, and you could end up losing money in the long term if you sell when the shares are low. Remember that crashes can be short-lived and prices may quickly rebound, right? So yeah, guys, just some information here to hopefully relax your nerves. But the natural cycle of the markets is to rise and fall, right? While crashes in the stock market can result in crippling losses, economies inevitably bounce back. This makes a strong case for a long view approach to investing. This means that creating a strong portfolio that will hold up to dives in the market values and provide a healthy mix of securities that will grow in times when times are good and you see through when the times are lean, right? So although the market crash can be scary, recovery will eventually come. You just have to invest carefully to minimize your risk and keep a close eye on economic conditions, right? So we just got through all the Fed news and all that this week, right? So hopefully, we'll start to see a rebound, or at least things start to calm down to where not everything is crashing, right? So yeah, guys, next, some information on AMC. We have received questions about the utilization rate of many stocks, right? This is for more text, and I want to explain some things here that I thought are key. Excuse me. Utilization is the percent of shares available at lending programs in the wholesale market that are currently outstanding on loan. The overall supply of the shares available is constantly fluctuating, and utilization essentially represents the demand for those available shares. So when you see AMC at 100% utilization, that means there's a lot of demand to short it, right? A sustained utilization rate of 100% simply means that there is strong demand for borrowing stock for all these borrowing reasons combined. It does not mean that the supply of the shares available to borrow is exhausted and cannot increase. Also, our data covers 85% of lenders, so there is still 15% of the lending market that we do not cover. This is a very large sample of the overall market, the largest available to retail investors that we know of, but it is not 100%, right? So always remember that with TYDE data. Short selling is the most prominent reason to borrow stock, but is not the only one. Other reasons include settling delivery of a separate trade, dividend arbitrage, or posting as collateral for another trade or derivatives transaction, among others. All right. These other borrowing reasons are why on loan shares should be considered a proxy for short selling instead of a direct representation. This is a clear directional correlation between on loan and SI shares, which is why on loan is still a useful metric for investors and traders. So yeah, remember AMC has been at utilization, 100% utilization now for like over 2 months, right? Because there's a lot of demand to short it, right? To bring the price down. And of course, we know it's manipulated, that it might not be able to be trusted, right? Strong demand is why the cost of borrow is so low. If they're loaning it for free, getting paid on the side, maybe, allegedly. All right, guys. So I just want to point that out. And also remember, AMC has shares in ETFs, right? And that's what's also helping bring down the price because those ETFs are going down. So the IWM holds about 11.31 million shares of AMC, and these other ones hold this, right? So when we go over to, where's the IWM? Right here. This is the daily chart. It's had 1, 2, 3, 4, 5 red days, right? So that going down has been going down for a while. It's also putting pressure on AMC to come down in price. And then I was gonna point, this stuff out with this OBV chart. Got it from Twitter. It's showing that ever since that run, the money has been here. Like you have some fluctuations, yeah, but we're still sitting up here. Like the money is coming in, right? But it's not leaving, right? Like if it would have left, it would have gone down, right? I'll show you. This is GME, the same. Ever since the run, people have been buying and holding, right, for the most part. Because when you have, like, this is Facebook, this is the OBV, it follows it, right? That means that it's not really manipulated, this price. This is like true selling, right? It follows it and buying. And then one more, if you look at Netflix, what did it do? The same thing, it followed it, right? The OBV follows it. That's the indicator on balance volume. And look at this, AMC and GME, but while the price is going down, right? So what? That doesn't make sense, right? So I wanted to show you the most up-to-date, Ortiz data. So the short interest went up. At one point I saw they borrowed about like 7 million shares to bring the price down today. So a lot of shorting happened today. Only 450,000 right here on Stonko Tracker and only 1,000 calls in the money. So go over that. But yeah, guys, I mean, everything has been down, down, down. It's not much we can do unless you're looking to buy right now, right? A lot of gains are made for people, right? When they buy low, sell high. It's just one strategy. But here you have the SPY, right? So it broke this resistance today, went under, had to add another support line. So now we're looking around the 383 to 380 line. If by Friday, in my opinion, guys, we're gonna come down because Fridays are usually bad. So you could see a flash crash where it'll come down and bounce off of here and try to make its way back up, right? In my opinion, because of how much fear is out there right now, right? Uncertainty. That could definitely help just bring everything down again, right? So we'll have to wait and see. We got 2 more trading days, right? Thursday and Friday. Okay, so the last thing I'm going to point out here with AMC, guys, is how ridiculously I think this thing is manipulated. So you have Cinemark, right? Their flow is smaller. It's only 120 million shares outstanding. But this is their daily chart for the past year, right? Pretty much in the same channel, right? And it's at $14. We know that they do not have the retail investor, that's backing them. We know that, it's a different stock, the way it trades and so on. Very low volume, things like that. So just want to point out, but the price is 1408, right? We're gonna go here. We're gonna look at IMAX. All right. So IMAX is at 1486. It lost about 3% today. Again, the past year, pretty much been in the same channel, right? Because not a lot of retail, I think, is like pushing this or buys this or sells this, right? But I just want to point out the price. Their float is way smaller than AMC, 58 million. So that could be a reason why it's that much higher. But just looking at the same type of businesses, similar competitors to AMC, and we're over here at 1037 for the day. A little bit of after hours action, but not too much, right? It's only up 1% right now, so still down over 10% for the day, right? And then what I want to point out, of course, is the inflow versus the outflow here. You got 91 versus 85. No big orders, but somehow the stock dramatically went from 12 right in the morning to 1050 right now. Huge drop with no large orders, right? And it's in more inflow, more money coming in than going out for the day, but the stock dropped dramatically, right? As you can tell here. Right here, right? So let's go back. Last thing, I'm just going to show you the daily chart here on AMC. And then we'll wrap this up, all right? So yeah, it definitely is looking bad right now because like I said, it broke this support. We're way down here, even broke this support of 1380, and we're coming back down. And we're at 1048, right? So luckily we have the psychological barrier of $10 to help us come up. But we are moving with the overall market crash right now that's happening, guys, right? So it's up to you guys what you want to do. I picked up a few more shares, not financial advice. I think that, eventually when the credit gets checked, right, when the collateral gets checked, when the banks decide to recall their shares, or Vanguard or whatever, whoever holds the amount of shares that they're lending on, if they recall them, guys, that's when we'll see the price go up. For now, we're seeing it go down, right? So till that day, I'm just chilling, buying, holding, because I'm not willing to accept this price for my shares, right? I definitely think they're worth more, and I'm willing to hold them until that point because AMC is still in business. They say they have enough money, at least for a few years, right, to hang on, to continue the business. And they are improving. They beat earnings. Normally when companies beat earnings, stock prices go up, not down. So yeah, and then remember, we usually have a run after earnings, like a week or two later. Okay, so I'm not panicking, guys. I just want to hopefully bring some education and some calmness to you if you were panicked today, or if you're panicking and are stressed. That's all I got for you guys today. Hope you have a great rest of your day, and I'll catch you later. Peace out.